What's likely to happen in space as opposed to having a real estate platform that you sell to a tourist, a space hotel, is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide. And mine is a man named Jan. And his crew,
It's a mess back here.
Heron
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah.
You know.
Good thing about California, man.
Oh man, we have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
You drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. Like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and
Yeah, don't go in the valley.
yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it, sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts. Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. he started with is basically, with his dad, was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley, or throughout the U.S., or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just drive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So
okay.
Vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LEQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her. Or that they miss
Literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research. Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ?
Yes,
Schedule a doctor's appointment.
no problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousy things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots, will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that, and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. Person shows up every 30 minutes, says hi maybe, and leaves, right? Like it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So don't forget to smash like and subscribe and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio. We are streaming on YouTube and Bloomberg Originals. Buenos dias, everyone, because it is Cinco de Mayo, Friday, May 5th, 2023. Carol Masser, Tim, you know, is on leave. You just heard Maddie in the last segment. And with us today on Bloomberg Business Week is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton. And Jess, you come into the show today and you bring with it a rally.
Yes, I always try to bring the light here. And just looking at where these regional banks are, you want to look at the KRE today, Carol, up 6% on pace for its best day since January 6th. Also, since January 6th, if you're looking at the S&P 500, up a little more than 2%. Also the best day since early January. What a day, right? Yeah. What a way to end the week after what's been, I know for you, you've been busy.
It's like everybody's celebrating Cinco de Mayo early because, man, what do we have to worry about? We are going to talk a little bit more about the regional banks, why there was only ever really just one that could come to the rescue of First Republic. This is an incredible story in the Bloomberg Business Week. And then set your clock, everybody, because tomorrow's Berkshire's annual meeting. Yeah, we're going to talk succession. Everybody's always wondering, although it seems like Berkshire has put a lot of that stuff in place. But whatever Warren Buffett says, we all sit up and take notice.
Definitely. And plus, we are going to get into why Russia's next standoff with the West lies in the resource-rich Arctic. So that's going to be important. It's a Bloomberg exclusive and today's Bloomberg Big Take.
It's a great story, folks. You know, everybody is going after some of the riches that are over there in the Arctic. So we'll talk about that. We'll also talk travel with Axel Heifer, who's the CEO at Trivago. And then because it is Cinco de Mayo, we are going to talk tequila with a rare family-owned brand out of Mexico. This was a feature in Bloomberg Pursuits recently. We really highlighted our Pursuits team, some of those that are run and created by women out of Mexico. So looking forward to that. On a day where, man, like I said, risk trade is on in a big way, certainly in the equity side of things. Treasuries have backed up again. So we got lots to talk about in our simulcast. And right now, we are going to head over to our TV colleagues. That's because Countdown to the Close, it starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. We've got 60 minutes left in the trading session. I'm Scarlett Fu here with Katie Greifeld, and we are joined now by our colleagues Carol Masser and Jess Menton. And of course, we welcome in full our Bloomberg audiences across our many platforms, TV, radio, YouTube, and streaming on Originals. And Carol, looking at the market today, we started higher and we've just kind of built on the gains. We're just off session highs at the moment, to the point where the NASDAQ has turned positive for the week.
Like everything is awesome again. It's really fascinating to see. Here we are heading into a weekend where we know we have seen some weekends where we are very concerned about the regional banks. Not today. The risk trade is on. And let's talk about the regional banks, folks. We started on Monday talking about it. We had JPM taking over First Republic. We had some calm. And then we had another rout, you know, in the group when PacWest and Western Alliance, we had some worries about that. That is not the trade today. Take a look at the Spider S&P Regional Banking, KRE. It is up almost 6% in today's trade. It is still down about 10% for the week. Keep in mind, short interest on this, though, is very high, higher than even what we saw back in 08. So just some perspective there. PacWest, though, up 85%. Western Alliance is up 44%. Zions is up 17%. But keep in mind, we see trading pauses on the upside to the downside in these names throughout the week. And these guys just still under pressure for the week overall.
And we've talked so much about the regional banks. I wanted to point to cyclical stocks that are starting to break out from their defensiveness. Looking at what's happening with chip makers. Obviously, Simi's been on a tear this year. Looking at home builders, but then also transports. If you look in that chart, trying to break out of that, if you're thinking about how these correlate to the economy, you are seeing a lot of strength there and a positive signal for the broader stock market, Scarlett.
Yeah, and broader stock market, it has lots of green at the moment, with the S&P 500 up by almost 2%, so paring back a little bit of its gains from the last 5 or 10 minutes. Dow Industrials adding another 1.8%. The NASDAQ climbing 2.4% thanks to Apple and its earnings, and the Russell 2000 small caps doing the best among the bunch, up by 2.5%. And of course, the jobs report, Katie, was interesting in that you would have thought there'd be a more tempered reaction today.
Not at all, especially if you look at the sector level. You have all 11 sectors in the green right now. Energy leading the charge, up over 3%, followed by technology, a big boost from Apple there, and the financials, broad financials. It's not just the regionals. Broad financials rallying 2.4%. Utilities at the bottom there, but still sitting on gains about 0.6%. Let's take a look at some of the individual movers. I want to highlight again the regional banks, not to repeat too much of what Carol said, because we've got to talk about Western Alliance. We've got to talk about PacWest rising, what, 87% just about. That is, of course, a record jump for that regional bank. We know it's still sitting on pretty steep losses year to date, but a great day, a great Friday for PacWest. Carvana, too, sitting on gains up almost 24%. We know this company, this automobile retailer, has had a lot of problems, but it reported a narrower than expected loss. You had adjusted earnings. They're actually going to be positive in the second quarter. You can see that relief rally in the shares. And DraftKings, too, had a pretty good earnings report. It raised its revenue guidance. That is raising shares today up about 16.7%.
There are a lot of headlines this week, and it's been a really long week.
No, nothing going on.
No, right? Can you believe that was only on Monday when Janet Yellen said that the new X date is June 1st, because that is when the U.S. would technically run out of cash to pay its debts, pay our troops, pay government workers, unless, of course, Congress raises the debt ceiling. So this is how it's showing up in Treasury bills. The white line at the bottom there, that is the yield on the bill maturing May 25th. That's 1 week before June 1st. You can see it stayed relatively flat compared with the other lines, which represent yields on bills maturing throughout June. Investors have tended to look past the political grandstanding that gets involved in any kind of debt ceiling discussion, counting on Congress to do the sensible thing in the end and raise the debt ceiling. But clearly, guys, there are a lot of risks in things getting pretty messy in the days leading up to and in the days following June 1st.
I have to say I get whiplash, I feel like, from day to day or week to week in terms of what the markets are saying or what they're thinking about interest rates or recession or what the big concerns are in terms of top of mind. Because I thought it was interesting coming off of the jobs report, you know, the strength that we saw last month. In particular, we're seeing some conversations, the narrative once again now talking about could we see maybe a hike in June? So it's really kind of crazy. Having said that, a lot of folks on Bloomberg weighing in about what they think the Fed will do. Randy Kroszner among them, former Fed governor. Here's what he specifically had to say earlier on Bloomberg.
What they're hoping for is this immaculate disinflation where you just slowly weaken the labor market. Unemployment rate only goes up to about 4.5%. The Fed's not going to quit until the labor market quits. And this is not a quitting labor market in these data.
All right, Randy Kroszner, of course, former Fed governor over there in Chicago. It's interesting, though, guys, you know, and we know from the Fed, Jess, and the Fed commentary from Jay Powell that they're watching the strength in the labor market. They're continuing to target getting inflation down, and that's what's going to ultimately drive them when it comes to rate direction.
And I'm going to be really focused at 3:30. That's when we get the update on the CFTC data, because we'll be able to see if hedge funds are boosting those types of short bets on the S&P 500 or not. We've seen that in recent weeks. I'm very curious to see if that is something that would continue.
Absolutely. The topic of short selling has become so important in this market, not just at the index level, Jess, but also on these regional banks. I think it was Carol who brought up the fact, if you look at KRE, I mean, the level of short interest is pretty staggering. And then you look at the action today, I mean, just incredible rallies and the likes of PacWest. You have to wonder how much of this maybe is, I don't know, shorts covering their shorts, taking profits ahead of the weekend.
Yeah, and how much of a short squeeze we're going to get in the weeks to come, as well as more banks come out and say that things are stable. Whether investors believe them or not is a different story. It definitely feels like the jobs report has taken kind of second, you know, a second step.
Fiddle.
Playing second fiddle.
Second banana.
Who would have thought, right? Thinking this week how the common thread has been what's going on with the regionals. But yep, we had the Fed meeting. You know, we had a jobs report. It's pretty remarkable trouble. We had JPM taking over a bank. Having said that, Jess, I'm starting to think about Warren Buffett and the Berkshire Hathaway meeting this Saturday. What does he say on a big macro perspective? And remember, during the great financial crisis, I mean, this is an individual who looks for value and is certainly linked up with some of the banking names in the past when there's been trouble.
That's going to be really key, Carol, to see, especially what he has to say as far as the banking sector, especially his holdings. He does have, obviously, these bigger banks when it comes to Bank of America, but his take on the stresses there and obviously the direction of the economy, investors are going to be really tuning in tomorrow to hear about that.
Yeah, his insurance companies and reinsurance companies at that throw off a lot of cash, so he has a lot of cash that he could deploy, but he hasn't because when Berkshire Hathaway goes and buys something, it moves the needle a little too much.
I just want to know, is Romain out on the West Coast because he's doing a movie or something? Is this why he can't join us? What's going on?
He won't
with
tell
that?
us.
I know.
Maybe he is.
He's wearing sunglasses a lot lately, so I'm just going to say.
It's all classified.
All right, we, the four of us, will certainly be back to count you down on this Friday. Our cross-platform coverage Beyond the Bell. Join us on radio, TV, YouTube, and of course, Bloomberg Originals, 4 p.m. Wall Street time for Beyond the Bell. In terms of what it means, in particular, for the equity trade and certainly the Treasury trade and where interest rates are going. So let's get to it with our incredible roundtable. We have with us Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams on Zoom in New Jersey. Also with us is Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. He's on the phone from our BI headquarters in Princeton, New Jersey. We've walked through the strength in the jobs report. We saw Treasury yields leaping higher, and we've seen that rally in stocks, particularly in the Treasury trade. So first up, I do want to start on the Treasury side. Short maturity Treasury seeing the biggest pop in yields. Ira, tell us about the trade and what you're seeing in it and what it says to you potentially about kind of where we go from here.
Yeah, firstly, the markets are very liquid, so a lot of these moves are just very exaggerated from what you might expect given the news flow. So we keep on pricing in, and we were actually pricing in cuts for June. Those are gone now, and I think that at this point, the market is trying to think of, hey, if the Fed does pause in June, will they start to cut interest rates early? And the market is still thinking that, right? The market's still priced for a few interest rate cuts over the next before the end of the year, and then a couple early in 2024. So we have so it makes sense for the market to kind of start pricing out maybe some of those. So 2-year yields can continue to go a little higher. We have fair value somewhere around 4%, so it's actually headed right there. And 10-year yields are also a little bit below fair value, but not quite as much. So you could still see a little bit of what we call bear flattening of the yield curve. So that's where 2-year yields go higher and faster than 10-year yields.
Gina, I want to bring you into this conversation because I know you watch technicals very closely, and we've seen some resiliency here, especially with the S&P 500 in the broader market, how it's held up. What levels are you closely watching for resistance and support here?
Yeah, so it's been actually phenomenal for the S&P 500. Typically, when the regional banks index crosses under its 200-day moving average, the S&P is below its 200-day moving average as well. But the regional banks index well below its 200-day average. It's never been this far below its 200-day moving average without the S&P 500 also breaking down. And we see very little evidence of the S&P breaking down. Certainly, we're off of those highs. Critical resistance levels are between 4150 and 4180 on the S&P. But the lows of last October, or frankly, even the lows of late last year, earlier this year, are nowhere within range of where the index is trading. We've just sort of been stuck right around 4,100, at our weakest point, really back, not even down to 4,000 in the midst of this banking crisis. So the index is holding in really well and frankly still seems to be quite range bound.
And when it comes to, anytime I look at the 52-week high list for the S&P 500, these are very consumer defensive oriented names recently. If we think of names like Clorox, other ones like PepsiCo are on there too. So I'm curious, as far as when you're looking from a breadth perspective, where are you looking for the leadership? And is this the type of leadership we would want to see on a high list like that?
Yeah. So you look for leadership in a combination of ways. Certainly from a 52-week high perspective, the defensive sectors are the strongest momentum groups in the index. Shorter term, we've seen some momentum develop, certainly for communications stocks and to a lesser extent the tech stocks in the index. as well as some of the riskier consumer discretionary space. So it depends upon your time frame. When you're looking year to date, leadership certainly has rotated into riskier segments of the index, as well as some of those key defensive areas. When you include what happened over the course of the last 52 weeks, you're naturally going to have more of a defensive skew. I'd say, right now we're looking at about 48% of the S&P 500 trading above its 200-day moving average, so you're right around a 50-50 mark. It is definitely a stock picker's market this year, and leadership has been somewhat mixed between some key defensives and some key cyclical sectors.
All right, so Ira, come on back in here. You were earlier on Bloomberg talking about and coming off of the jobs report, and you said if the Fed could convince markets that they're not going to be cutting rates for a year, that's almost like building in 2 more hikes. The Fed has a big job, and we'll start to hear from Fed speakers once again, really kind of managing the markets once again, because there's been so much volatility on the Treasury side of things.
Yeah, there has been, and part of that is because of uncertainty and because of uncertainty about what they're going to do. But a big part of that is also what's happened with the banks and financial capital as well. So, so I think the Federal Reserve, firstly, if they want to fight inflation, they have to make sure that financial conditions stay reasonably tight for a long period of time. And that's one of the reasons why I think Jay Powell has continued to mention at every single press conference and just about every single speech that he's made that the Federal Reserve is going to be on hold for a long period of time. But he hasn't said yet a couple of key things. One, what would cause them to cut, right? If he basically says, look, we're not cutting unless the unemployment rate goes up significantly, for example, just as like one necessary condition, I think then you wind up pricing out, another half a hike or maybe even half a cut rather, if not a whole cut. And if you do that it does act from an economic perspective very much like an interest rate hike because the market's currently expecting those cuts, right? So if you take those out, now you've effectively done a hike without actually hiking. This cutting and hiking at the top is getting confusing, especially on a Friday afternoon. But secondly,
and after the week we've had, it's been rough.
And the volatility in the market is in part, I think, has been caused by the fact that the Fed was in the market buying bonds through its quantitative easing programs or reinvestment programs, basically for almost over a decade. And now that they're out of the market, there's just not an outlet for off-the-run securities and for some of the risk that has just been flowing in and out. Now that the market now is $26 trillion, right? You're talking about a massive market that just needs to find a home, and there's just not enough capital against it with people willing to take risk.
Hey, Gina, I want to bring you back here, in considering what a crazy, wacky week, and I thought about, it is hard to believe that it was just Monday morning that JP Morgan took over First Republic, kind of what a week we've had. Having said that, it does feel like the markets, despite some of the moves, particularly on the regionals, that as you said, we are seeing signs of strength. And I do wonder, in terms of the Fed specifically, how much of what the Fed might do next is factored in. And again, expecting that either the Fed stays where it is or possibly, I don't know, could maybe a little bit higher, maybe a little bit lower, although Jay Powell pretty much ruled that out.
Yeah, it's a very good question, the million-dollar question, in fact, that I think most investors are asking themselves. Because on the one hand, you have very solid earnings results relative to expectations, and that's been a big part of this sort of market stability in my mind. Typically during earnings season, stocks do well. When you got 80% earnings beats and earnings falling at half the pace that analysts were anticipating, stocks can do quite well. And that's been the scenario for the last 4 weeks. But eventually earnings will tail off, and we'll have to face the reality that we're still facing higher interest rates. When are interest rates going to go lower? Because frankly, the equity market at large does appear to, like the bond market, anticipate that eventually economic weakness will emerge, and we will then see subsequent rate cuts to really support valuation. So I would say the equity market already is priced for recession. That's why we see these earnings beats turning out to be very positive news for the index. And when we're looking forward, the equity market is likewise already anticipating that we will see cuts to the Fed funds rate in the midst of that recession, which will support a recovery coming in 2024. Lots of question marks still.
Gina, just real quickly, when the equity market starts to price for recession, how much does it go down? How much is that reset? In your view?
Well, we think the equity market already priced for recession, Carol. It was something that we talked about a lot in 2022, where the equity market at its lows back in September, October was already priced for a 15% downdraft in earnings coming, We've seen nothing of the sort occur so far. So the equity market has a lot of cushion to price, to accommodate major earnings weaknesses over the course of 2023. The problem is the equity market, though, can only hold those levels for so long. If the earnings recession just becomes delayed, say we go into this minor recovery built on margin stability because inflation is coming down, and then we fall into the true economic recession in 2024, the equity market is completely unprepared for that kind of bumpy environment, particularly if the result is no change in Fed funds rate or a minimal change in that Fed funds rate to accommodate the equity.
Hey, Ira, we only have about 30 seconds left, but just given where yields have fallen so much, now that the Fed has signaled that potentially we could be in for a pause, is it most likely we're not going to see, say, the 2-year above 5% like we had seen in March again?
No, yeah, that's almost impossible at this point unless the Federal Reserve is going to start to hike again. So as long as the Fed's on pause, I think you're talking about a 4% is probably about the ceiling for 2-year yields.
Wait, are you saying Jamie Dimon and his 6% rate, isn't it what he called for? Is that he's wrong?
If memory serves, he said that we were going to go to 5% when we were at 3 and we went to 1. Yeah?
We are living in fascinating times, and this is why we lean on the both of you to make sense of it. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Gina Martin-Adams, our Chief Equity Strategist at BI, joining us both from New Jersey. You are listening and watching Bloomberg Business Week, just getting started on this Friday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in equities has halted the S&P 500's longest losing streak since February, with the benchmark now up by 2%. PacWest Bancorp almost doubling in value, leading a surge in financial firms. PacWest up 83% right now. Among other regional banks, Western Alliance up now by 45%. Tiffany Wilding is an economist at PIMCO, and she says you cannot ignore the turmoil in bank stocks because of the broader implications.
I do think that the decline in bank stocks is quite concerning, and that's because, historically, there's been a lot of academic analysis that's been done that suggests when you have bank stocks that are falling, 30%, 40% on average, like what we've seen more recently, that tends to be indicative of higher cost of capital for that industry. Obviously, that tends to slow their loan growth, and that's really important for the economy for future growth.
And today, though, very different story for those bank stocks. They are rallying, but keep in mind, year-to-date, PacWest is down by 74.6%. S&P up 80, up by 2%. The Dow up 581, up 1.8%. NASDAQ up 280, that is a gain of 2.4%. 10-year yield 3.43%, with a 2-year yielding 3.91%. Spot gold at $2,017 the ounce. Precious metal now down by 1.6%. Crude rallying 4.2%. West Texas Intermediate crude 71.41 a barrel. An update on Wall Street, 37 minutes to go. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet there with the Bloomberg Business News Flash. Carol Masser, Jess Manton live in our Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. Well, as we mentioned earlier, the U.S. job market remains resilient, to say the least. Job growth in April, broad-based, reflecting gains in healthcare, professional and business services, as well as leisure and hospitality. We're going to talk a little bit more about leisure and hospitality later on with the CEO of Trivago. Keep in mind, though, the 2 prior months of payrolls were revised lower by a combined 149,000, so important to factor that in as well. Well, back with us on what she is seeing in terms of employment needs is Becky Frankowitz. She's Chief Commercial Officer, President North America at Manpower Group. She joins us via Zoom from Milwaukee. Becky, good to have you back with us. How are you?
On the program.
Well, it's great to have you back with us. Tell us, we got another strong jobs report. We saw some revisions the prior 2 months. What are you seeing specifically? And what words would you describe or use to describe the current labor market and how it compares to maybe the last few months?
Yeah, so I would say, better than expected job numbers. I like to do the analogy. It shows the promise of spring. Very low unemployment, 3.4%, Carol, matching the all-time low of 1969. So very tight labor market, 253,000 jobs created. Not so, there's some clouds on the horizon. We're not seeing labor force participation come back at the rate that we want. You mentioned the revisions are now material. 149,000 is material. And I would say that the third kind of storm cloud we want to keep our eye on is temporary staffing is now in decline, which is often referred to as the canary in the coal mine in terms of going into an economic slowdown. So I think very good overall numbers. Another positive, by the way, is reabsorption. And so as people are laid off, they're being reabsorbed very quickly, as we saw continued unemployment claims tick down. So there's lots of positives and a few storms on the horizon we want to keep our eye on.
Becky, I'm curious to hear about what industries are seeing some strength when it comes to job growth, whereas other industries that are struggling right now.
Yeah, so medical, IT, and sales are making up 44% of all the open jobs in our country right now. Medical, IT, and sales. So lots of strength there. And again, we know the jobs numbers are looking backward. I'm giving you real-time data today in the country. We're also seeing strength, and you mentioned it in your opening, in hospitality and leisure, retail starting to come back, and a very interesting fact. So, probably the last 2 years, we've talked about the 3 most in-demand roles in our country have been registered nurses, software developers, and logistics or truck drivers. It's been the same for at least 2 years. We've seen for the first time in 2 years, truck drivers drop down. They're not in the top 5 or 10. And surprisingly, in the number 3 position now, after registered nurses and software developers, is stock clerks. Definitely indicating the return to retail.
So nurses, software, and now stock
clerks.
So that plays into the retail sector specifically.
Absolutely.
What does that tell you? That's an interesting switch, because I would kind of say that you need logistics and supply to bring the stuff to the stores so that the stock clerks can do something with it.
Yes, well, it's still, but think about the way, what it indicates is the way we're shopping has changed. Logistics is still, in the top 20 in terms of jobs in demand, but it's the first time I've seen it fall out of the top 3, and it tells you that the way we are shopping has changed. So, we're going back in physical retail, still shopping online, but back in physical retail. And it tells you that, people are traveling more, and so going and stocking up before they head out for spring break or head out for summer travel with retail expenditure. And so it's the other interesting fact is if you think about who's hiring, what companies are hiring, Great Clips, the hair company, Shipped. So, a little counter, they're now back on the hiring, and then back in the top 5, and they had dropped out, surprisingly, Amazon, top 3 companies hiring in the country today.
Oh, wow. I'm curious to hear more about what you're seeing on the wage front, because we did, when you're looking at these month-over-month numbers in this latest report, it rose about 0.5%. Analysts were thinking it'd be around 0.3%. Obviously, wages have been such a big thing that we know the Federal Reserve is watching. What are you seeing there?
Yeah, so we have continued to see robust wage growth. I would say the rate of increase has slowed, but I like to look at it in 2 parts. And Jess, I think that was your question. I like to look at it in 2 parts. What is the wage growth for people staying in their job? And that's about 5.6% increase year over year if you stay in your job. And if you change jobs, it's up to a 13.2% increase. So we still are in a labor market that's incenting people to change jobs. So wage growth continues. The pace is a little slower, but the increase divided by those who stay and those who move jobs, still very robust.
That's interesting. So, maybe that is what we continue to see pop up in the JOLT surveys, because there's still a lot of movement around here. So, Becky, add it all up. Does it say to you that recession, folks, are you crazy? Or I've been kind of asking this for a long time. Could we see slowdown, recession even, but with a strong job market?
I think that's actually a fantastic question. What I would say is we do anticipate some cooling. We've seen some slowdown in demand in a couple of areas. I talked about the top demand, but a little slowdown in finance and accounting, in research and development in terms of demand. So some of the professional, manufacturing, industrials, slowing down a bit in demand. So I think we're going to see a cooling, but I think we may see a recession or a slowdown with a stronger job market than we've seen historically in those times. I'm not sure it will have the free fall that we're all expecting.
Are people still labor hoarding? Which has been like a new phrase, right? That has come out of all of this. But this is basically companies, because they know it's such a tight labor market, saying, I'll hold on to these workers because I know things are going to turn around, rather than let folks go.
Well, it's a little bit of an overhang of pandemic paranoia. I had to let people go, then I couldn't find anyone. So then I hoarded all the labor and didn't let them go. And yes, we are seeing people hold on to the talent they have, and in addition, hire for really specific in-demand roles. I do want to caution all of us, though, this tick down in temp hiring is traditionally the leading indicator for going into an economic slowdown. And we saw temp hiring fall. In fact, it's down year over year, almost 170,000 jobs. And so that we all need to keep an eye on that.
What's a particular threshold when it comes to that metric that would be more of a red flag to you?
Yeah, so I think the decline is the first, the month-over-month decline. We've seen it for several months now, and it's been a little sporadic, like everything else. It'll decline, then it goes back up, and it declines again. But I'd say we're in the territory now where labor hoarding, people will hold on to their permanent workers, but in fear of recessionary conditions, they won't hire the additional flexibility from a temporary workforce. And so I would say we see enough of a yellow flag, I won't say red flag, a yellow flag now to keep a very close eye on it.
Go back to when you said Amazon now is among the top 3 companies in terms of hiring. They had dropped out. That's based on what data? And I'm curious who else is in that top 3?
Yeah, so in the #1 position is Great Clips, so the hair cutter. Then you have Shipped, the online retailer. and who had been not even on the list. So what happened there is they weren't hiring at all, and now they have some needs to catch up with the summer travel and stocking up. And then number 3 was Amazon. And so what's happening there is we're starting to see those stock, a different version of stock clerks, but seeing that same retail phenomenon start to come back into the economy.
Where's that data from?
Oh, yes, I'm sorry, I didn't answer that.
That's okay.
We actually scan all of the open jobs in the country. We scan them all and we aggregate the data, and that's the source. So without duplication. So there isn't duplication in the data.
We only have about 45 seconds left, but I wanted to follow up because you had mentioned obviously those finance jobs where we saw those starting to lose that momentum. Is that clearly the obvious reason of what we've been seeing the past few months there with those with what's been happening with the stress in the regional banks?
Yes, I think they're definitely related. If you think about the macro trends that drive changes in the labor market, one, of course, is banking, and the other, depression of demand we're seeing is anything related to inflation. So durable goods starting to be under pressure. So it's all tied to the economy.
That's why we like talking to you, man. You give us the specifics.
Great stats.
You give us perspective. I am blown away by that Amazon figure, because they've certainly been among those, who are cutting coming off of the pandemic.
The
so
retailers and the stalkers as well.
Stalkers, yes. Did you say, or stalkers?
Yes,
stalker.
Just kidding.
That's my accent. That's my accent.
Becky, thank you as always. Have a great weekend. Becky Frankowitz, she's Chief Commercial Officer, President of North America Manpower Group, on Zoom from Milwaukee. No, it is interesting, right, in terms of retail, because so much has been online.
Right, and then there you go. We're seeing some strength there.
All right, folks, let's get to world and national news with Nancy Lyons in our Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Carol. COVID-19 no longer constitutes a global health emergency. That's the word today from the World Health Organization. It's lowering its alert level 3 years after the coronavirus began killing millions as it swept across the world. Bloomberg's Amy Morris says COVID numbers here in the U.S. are certainly trending downward.
COVID deaths are now the number 4 cause of death in the U.S., behind heart disease, cancer, and injuries. U.S. deaths usually rise year to year, in part because the population's growing. But the pandemic accelerated that trend, making 2021 the deadliest in U.S. history. 2022 saw the first drop in deaths in 13 years. 3.3 million people died in the U.S. in 2022, 5% lower than the year before, but still much higher than pre-pandemic years. Amy Morris, Bloomberg Radio.
CDC Director Rochelle Walensky is stepping down at the end of June. President Biden says, quote, she led a complex organization on the front lines of a once-in-a-generation pandemic with honesty and integrity. Well, the head of Homeland Security is on the southern border, meeting with Customs and Border Patrol agents in Texas ahead of next week's end of Title 42. Secretary Alejandro Mayorkas says a new rule will be in place by May 11th.
Individuals who do not access our lawful pathways will be presumed to be ineligible for asylum and will have a higher burden of proof to overcome that presumption of ineligibility.
Mayorkas says there is an agreement to surge resources to several Central American nations as a way to prevent people from making the journey north. Mexico, he says, is also agreeing to put troops on its southern border. The 149th running of the Kentucky Derby will be taking place tomorrow at Churchill Downs. This year's favorite is Forte, that's won 5 straight races. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. Stocks higher across the board. We are off session highs, but still solid gains for the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlotte. U.S. stocks with an aggressive bid from the start, helped by Apple and gains in the regional banks. Dow's currently up 542 points. S&P's gained 77, while NASDAQ is higher by 2.3%. The U.S. 10-year yield at 3.44%. Gold is sinking, down 32. Oil's in the green, and Bitcoin is higher by 2%. Of the main 11 S&P sectors, all are trading in the green, led by gains in energy, tech, and the financials. And leaders to the upside in the Dow, Apple and Disney, while only Intel fell. And regarding those regional banks, PacWest gained as much as 96%. Western Alliance rose as much as 59%. And in other news, First Republic executive trading is being probed by SEC investigators. Wrapping things up, Apple is having its best day since November, rising 4.8% after earnings. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend, and to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes.
There were a lot of software solutions that attempted to solve this.
All right, there we go. And little gremlins coming out on this Friday. Just about 18 minutes left in today's trading session. It happens, man. It's been such a crazy week.
It is.
Everybody's just kind of...
Everyone chiming in.
Exactly. Having said that, speak about chiming in. I mean, it's a broad-based rally on Wall Street. So you are seeing a lot of buying into the trade. We're just coming off our best levels. You just heard Charlie giving the market update. You did see yields moving up, certainly at the shorter end. So let's get to it with our next guest. With us is Michael Sheldon. Back with us, I should say. He's Executive Director, Chief Investment Officer over at Hightower RDM Financial Group, joining us once again on Zoom from Westport, Connecticut. Michael, nice to have you here. Jess says, man, I talk to Michael all the time, have for a long time. Interesting market cycle. Again, I feel like we have said that a million times since we've come off the pandemic. What are you more optimistic right now about the outlook or more pessimistic?
Well, we had a lot of news this past week, and I think going into the week, we sort of had a very bifurcated market. It's strange to sort of think about, but going into this week, we had 3 sectors of the S&P 500 that were up double digits, and we had 4 sectors of the market which were actually negative. So it's a very strange kind of market. It's been a very narrow market with a lot of the gains led by a few stocks. If you look at the sort of health of the market, back when the market peaked earlier this year, we had something like 80% of stocks in the S&P 500 above their 200-day moving average. And today we only have less than 50% of stocks above their 200-day moving average. So it's a really kind of difficult market to sort of navigate right now. I think we had some interesting news this week. We had obviously the Fed meeting, and I think we were hoping for 2 things. We were hoping to hear whether the Fed was done. We didn't really hear about that, although we know they're closer to the end. And unfortunately, the Fed did not say that they were about to cut rates, even though the Fed fund futures market is currently pricing in 3 cuts this year. So that sort of difference between the Fed and what the investors are thinking is yet to be determined. And then we also got a lot more news on earnings. And then today we had the jobs number.
So how do you position in this type of environment when investors are so split? What are you buying? What are you selling?
Well, it's important as investment advisors, we do a financial plan for most clients that come in, and then we sort of figure out what the rate of return is they need in order to meet their long-term investment objectives. So we have different models. We have a more growth-oriented model. We have a more income-oriented model. Some clients need to be more aggressive. Some can afford to be more defensive. I can tell you over the past few weeks, for example, or over the past month or two, one thing we've been doing is we've been buying more corporate bonds. So we used to own a lot of corporate bonds in the past, but many of them matured and the yields were just too low to reinvest. But more recently, yields are the highest they've been in quite a while. So I'd like to say there's some income in fixed income now. So we've been buying a lot of corporate bonds, and it's great that we can lock in that 4.5% to maybe 5.25% yield, and that's on the fixed income side of clients' portfolios.
One of the things I thought was interesting along those lines that you shared in notes with our producer Paul Brennan is that despite the concerns that are out there about the outlook, corporate bond credit spreads remain healthy, indicating fixed income investors are not overly concerned about the outlook for economic growth right now. It's a great indicator, correct?
Yeah, absolutely. I mean, there's so many things going on right now. You have the worries about the regional banks. You have problems in corporate profits. There's the lagged effect of the 10 rate hikes that we've already had by the Fed so far this year. But corporate credit spreads, which are often a leading indicator of trouble, especially high yield spreads, have really been pretty well maintained, pretty narrow. And I think that's a fairly healthy sign. You could argue that in the high yield bond market, many of the corporations have sort of stretched out or refinanced in the past, so the quality of the high yield market is higher than it has been in the past. But if you really thought we were going to a major downturn, credit spreads should be widening as opposed to narrowing.
I know we're going to get the senior loan officers survey on Monday, and this is important because obviously it's going to be the first reading since it's quarterly of obviously what we saw happen last March. What specifically are you going to be looking in this report when it comes to credit conditions and banks?
Yeah, that's a great point. I think that comes out very soon, maybe next week. I'm not quite sure the date.
On Monday. It actually comes out Monday.
Okay. So there are a few sort of red flags that we've looked at, which historically have pointed to a weakening or a downturn in the economy. There's the monthly leading economic index, which has been down something like 12 months in a row. There's the yield curve, which is negative right now, and I'm sure you've talked a lot about the predictive powers of that. And then there's the Fed senior loan survey, which doesn't get a lot of press. And basically what it shows right now is, I think the number is somewhere around 40%, a net 40% of banks have tightened lending conditions for various loans, whether it's commercial, industrial, or consumer loans. And typically that sort of, when you see those types of numbers, when banks are pulling back on credit, that tends to have a negative impact on the economy looking ahead over the next 2 to 3 quarters. So we've seen some weakness in manufacturing and housing, but overall the consumer has held up pretty well. So it'll be interesting to look at the Fed senior loan survey on Monday to see if banks are getting even tighter than they were 4 months ago.
Having said that, just coming off of Milken and so many participants in the private lending market and private credit market were there, many of them were saying the message was that, listen, banks haven't been lending generally for a long time when it comes to certainly folks in the middle market space, middle market companies, and then that's where the private credit has jumped in. Is there some comfort to be found because we do have a shadow banking system so that is out there to keep kind of the economy going? And I'm curious how you see that, Michael.
Well, that's a good question. We do have, in addition to owning individual stocks, mutual funds, and ETFs where appropriate, we do own private investments for clients when appropriate for certain clients. So we're familiar with the direct lending market. And there has been a shift over the years from loans made from banks to the I don't know if you call it shadow lending or to other sources of funding. I think the way to sort of look at this is that deposits in the banks were something like $17 trillion several months ago, or 6 to 12 months ago, and we've started to see money coming out of the banking system. And that sort of coincides with the money supply actually having been negative recently on a year-over-year basis. So I think generally speaking, it's not a healthy thing when people are pulling their deposits out of banks because banks need that money to make loans, even if on the margin they're making less loans than they were in the past.
Well, you've also noted that we have some $5.3 trillion in money market funds assets today versus $3.9 trillion at the peak of the last economic crisis, the great financial crisis in 07-08. Our Lisa Abramowitz tweeting about that earlier today. So that's another concern certainly out there. Smart conversation, Michael. Have a great weekend. Michael Sheldon, Executive Director, Chief Investment Officer at Hightower RDM Financial Group, joining us via Zoom from Westport, Connecticut. Just about 11 minutes left in the trading session, getting ready to wrap up the Friday day and the week. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg the Securities and Exchange Commission is investigating the conduct of First Republic Bank executives before the government seizure and sale to J.P. Morgan. J.P. Morgan Chase shares are up today, part of a broader rally. JPM up now by just about 2%. Apple is reporting a rebound in iPhone sales, helping the world's most valuable company top earnings estimates and weather an industry-wide downturn that has battered much of its product lineup. Apple shares today, they're up by 4.7%. Dan Ives is a senior analyst at Wedbush Securities. He's got an outperform rating on the stock, along with a $205 price target.
Look at the tea leaves with Cook and Cupertino and how they're laying everything out. I think we'll see more at the developer conference in June. I think this will be back double digits in the next 3 to 4 quarters. And just given the macro, it's sort of a shining light in a dark storm. And that's why I think more and more investors that were underweight Apple and they continue to yell fire in a crowd theater, they're just going to have to be forced to owning this because of what's ahead on the product cycle.
And again, I mentioned he's got that 205 price target. Apple shares today at 173.70. Carvana shares surging after the debt-ridden auto retailer says it expects to report a profit this quarter as the volatile used car market shows signs of stabilizing. Carvana shares up 24%. Those are the company stories we're looking at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on TGIF. Thank God it's Friday after a jam-packed week. Carol Masser along with Jess Menton. As you know, Tim is on leave. And having said that, just a couple stories we wanted to bring to your attention. One has to do with and plays to our focus for the week overall, and that's the regional banks. This story, a Bloomberg exclusive, that the SEC is investigating the conduct of First Republic Bank executives before the government seizure and sale of the lender to J.P. Morgan. This is according to folks familiar with the matter, looking into whether any members of the then executive team of First Republic improperly traded on inside information, according to one of the people in the know who asked not to be identified because the probe has not been publicly disclosed. Couldn't immediately be determined which former execs are the focus of the inquiry. No one previously or currently at the bank has been accused of wrongdoing, and the investigation could end without anyone being accused of wrongdoing. But that would be a major no-no, to say the least.
There is, and there is a separate story that looks at how the SEC is probing the trading activity of SVB executives before its collapse. That was a Bloomberg News story as well, Carol.
Yeah, I mean, it's kind of amazing, and yeah, we'll wait to see. As we said, nothing may come of this, but nonetheless, it's something on our radar. Having said that, another story by Bill Allison, Warren Buffett's ties to Bill Gates, whose charitable work has triggered some criticism, are putting investors in Berkshire Hathaway at risk. This is according to an activist shareholder group attempting a long-shot bid to remove him as board chair at the company's annual shareholders meeting, which is coming up tomorrow. We're going to talk about that meeting a little bit later on.
And this is a big thing because one of the things that keeps coming up is questions about when it comes to the corporate structure at Berkshire Hathaway. So this is a rare kind of public rebuke for when it comes to Buffett and the company. But this will be key, especially what kind of questions and obviously the answers that they have when it comes to its corporate structure tomorrow.
Yeah, really fascinating. These two, though, have been big buds
and
working together on a lot of things for, you know, when it comes to certainly the world at large. The group cites Buffett's longstanding financial support for Bill and Melinda Gates Foundation, one of the world's biggest charities focused on health, education, and gender equity that critics say has too much power and no accountability. Anyway, check it out. A great read on the terminal. Hey, right now, we've just got a few minutes left in the trading session. That means Jess and I are going to head over to Katie and Scarlett because we've got Beyond the Bell coming up, our cross-platform coverage counting you down to the close on this Friday. It starts right now.
The stuff going on in regional banks, how much you really want to be taking a position at this point. All right, we are counting you down to the close. More market coverage right here on Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, we're about 2 minutes away from the end of the trading day. Scarlett Fu and Katie Greifeld right here, counting you down to the closing bell. And of course, here to help us take you beyond the bell, We have a global simulcast. We've got Carol Masser and Jess Menton, and in doing so, we bring together our Bloomberg Television, Bloomberg Radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And that crucial moment, Carol, came early with the 8:30 jobs report, and since then, it's been about digesting the jobs report and what it means, even after Jay Powell made clear that a pause is likely in June.
And maybe we get into this a little bit later, but I do wonder if the strength in the job market makes it easier for Jay Powell to kind of continue doing what he does, or makes it more difficult. Having said that, regional banks, big focus this week, and they are definitely rallying today. The regionals are up in a big way in today's session. They're up about 6.5%. Look at the KBW, the broader bank index, up about 4.5%. But just as we know, still hammered for the week overall.
Right. If you look at the KRE ETF that tracks the regional banks in the S&P 500, up about 6.4%. So that would be its best day since January 6th of 2021. So big move there.
And you have to wonder when you see some of the huge moves that we're seeing in the regional banks, in particular, how much of this is fundamental, how much of this is, trying to call a bottom, how much of this is a short squeeze, I don't know.
Not to mention huge moves. You can't talk about huge moves without looking at the 2-year yield, right? It's just another day where it moves 12 basis points, and we don't even really mention it. Just below that 4% line, 3.9098% right now. The bond market, looking at the jobs report, perhaps a little differently than equities.
Yeah, absolutely. And, it's not the first time we see somewhat of a disconnect here, but time will tell. And I guess we're going to start counting down to the next Fed meeting already.
Of course, always, always. All right, we are about to close with gains of at least 1.6% on the Dow, the S&P, and the NASDAQ. We finish off a week of a chaotic week, it really feels like, on an up note. But for the most part, the S&P and the Dow do finish with losses for the past 5 days. The NASDAQ has eked out an advance for the past 5 days, up by 0.1%, Carol.
All right, here's your best performing stocks for the week overall. Royal Caribbean, Live Nation, On Semiconductor. Worst performing, Newell Brands, Estee Lauder, and Paramount Global. A lot of it had to do with earnings really moving some of these names this week, Jess. Or Katie.
Katie, Jess is fine. So we're going to get to you, Jess. Let me have my moment. I'm here at the board. I want to talk about all these green bars because if you look at the industry groups, there is really not much to pick at. It's all green. At the top, you have autos. We know that we saw a big rebound in Tesla today. Then you have tech. Then you have the banks, of course, that group up over 3%. It was a really strong move for the banks overall, not just those regionals. You go down the list. If you look at the bottom, they're still in the green, but it's utilities as you would expect, on such a risk-on day. And then you have some pharma names and household products as well. Those are your underperformers, Carol, but still positive.
Don't you think Katie Jess would be a good name for a horse?
I don't know.
At the
about
Derby
that.
or otherwise? All right. Let's get to some of the individual gainers in the Friday trade. Zions, check it out, folks. Number one in the S&P 500, a gain of just under 20%, 19% to be exact. Regionals, we've been talking about it like ad nauseum, but in a big way, bouncing back today. Comerica, KeyCorp, also top in the S&P 500. And then let's go to Apple, right? We were breaking down the earnings last night. This was top in the NASDAQ 100. Stock seeing the biggest rally of the year, up more than about 33% so far in 2023, finishing the day with about a gain of 4.7%. So off its highs, but nonetheless, still a strong rally. We know the news, right? A rebound in iPhone sales last quarter. This is the world's most valuable company. It topped earnings estimates and really weather an industry downturn. And then we had Live Nation, number 3 in the S&P 500. Remain talking to the CFO, but the company late Thursday reported a more than 70% jump in sales for the first quarter. So some big numbers there. That stock, Katie, up 15%. You've got some breaking news.
I do have some breaking news, of course, digesting this, but the redhead crossing the terminal right now. Binance, of course, the biggest crypto exchange in the world. It's facing a U.S. probe of possible Russian sanctions violations. Again, we know that the crypto industry, the crypto exchanges in particular, have been under a lot of scrutiny. And now we've got some news about the biggest one globally. Again, Binance facing a U.S. probe of possible Russian sanctions violations. We're going to continue to follow this story.
Yeah, and of course, this is according to Bloomberg reporting. So this is according to people familiar with the matter. It is not confirmed yet, but it's interesting. We're talking to Emily Rowland earlier, who was saying that crypto has, of course, done very well. I was reading somewhere that when people seek safe havens, institutional investors buy gold while retail investors look into Bitcoin. So both are getting a big lift as safe havens, but from different groups of investors.
Well, ladies, I gotta say, it was tough to find some decliners amidst today's rally, but there were some. So I'm gonna start off what's happening with Lyft. So if you look at its stock down 19%, its worst day since February 10th. The company did have a forecast when it came to revenue for the second quarter that was below analyst estimates. And I mean, this just came right. We just heard from Uber earlier this week that on its side of things, especially when it comes to deliveries, Uber Eats as well as rides, it still saw that strength. Lyft, however, did not. So going to be an issue for its new CEO, David Risher, who just took over the helm. Another one, looking at Booking Holdings, another obviously consumer-focused companies when we are seeing and talking about the travel demand for the summer. It did see some bright spots as well as Expedia earlier today that saw that. But when it comes to its strong start to the year, it had some solid bookings, but it did have tougher comps. So you're seeing bookings holding down about 1%. And then another one I wanted to point out, looking at life sciences company Biorad Laboratories, it dropped 17%, its biggest decline on record after it did lower revenue growth and its margin projections for the current year.
Well, let's take a look at the bond market because you wouldn't know it by looking at stocks, but there was a very strong NFP report today, and you could see that in the Treasury market. Two-year Treasury yields rising about 12 basis points or so, still below 4%, but a big sell-off there, and that's really where the concentration of the selling was. You move out the curve, the 10-year Treasury yield up about 5 basis points or so, and less so, again, if you look at the longest tenor there, only up about 2 basis points on the 30-year Treasury. So you add that together, you did see the yield curve flatten, move deeper into inverted territory because it was the front end that absorbed the brunt of that selling.
All right, you know, when we look ahead to what's to come next week, obviously there's a big CPI report on Wednesday, but there's still some earnings coming out that will really capture a lot of attention, among them for Citizens, because it absorbed the SVB assets, and that regional banking story is not going away anytime soon.
Yeah, it'll be interesting to see, you know, what kind of, you know, volatility we have once again in the sector, because we had so much this week. Having said that, you do have that CPI report. You also have Bank of England meeting. You've got some earnings from the likes of Airbnb, Wendy's, Beyond Meat, and let's not forget Disney. That's a big one that really reads into the media, the streaming world, and also what the consumer is up to and traveling.
Another big thing that's actually coming on Monday, the Senior Loan Officer Survey from the Federal Reserve. This is quarterly, so it'll be important to see how those banking stresses and credit conditions look like. Obviously, when we think about what happened in March, that was the tail end of that month, but we were talking to Michael Sheldon over at RMD Financial Group about that, and that's something that he's going to be watching closely next week.
I think that's one of the interesting things that's happened over the past few months. We pay attention to data releases that really we never pay attention to in terms of the top tier, but the Senior Loan Officer Opinion Survey, the SLOOS, as I pronounced, or learned that it's pronounced, it's really soft. I don't know if you guys have looked at this report before, but it's a survey basically of up to 80 large domestic banks, 24 U.S. branches of foreign banks, and it's kind of a questionnaire. They ask them whether or not their standards for approving loans have tightened considerably to eased considerably, so it's very soft.
But it's also one of those instances, because it's a survey report, of watch what they do, not what they say. People can say one thing and then do something else entirely different, right?
Yeah.
So that's something to keep in mind. By the way, speaking of doing, is anyone going to be watching the Kentucky Derby?
I'm definitely going to be drinking a mint julep, and I definitely will be watching on the big screen. I mean, it's a lot of fun. Come on, Carol, I feel like you're definitely going to watch.
I might watch. I mean, it goes so fast, right?
That's the point.
I know, that is the point. It's not like watching a U.S. baseball game.
It's a lot of build-up, a lot of content and programming to, you know, for a 1.5 minute race.
The best 2 minutes and something? I I don't know. Help me out.
Is there a favorite?
That sounds about right.
Is there a favorite horse? I mean, this is your
Well, there are a lot of horses that were kicked out,
They're
right?
all my favorite horses. I actually don't know. It's a field of 20, right?
I got to point out, DraftKings today, up 15%, best day since November 10th.
Are you talking about betting and stuff? Is that what's going on?
Yeah.
We'll have to check out DraftKings and whether you can bet on the Kentucky Derby there.
Yeah, really. I mean, it's one of those events Scarlett and I were talking about earlier, though. It really does reach across audiences. It's not just horse lovers necessarily who watch the Derby, and people love to bet on the horse
What's
races.
a better bet, on the horse race or on regionals?
Are you going to pay attention to Warren Buffett and the Berkshire Hathaway annual general meeting, or would you pay attention to?
I've got a busy Saturday.
Ooh, can we play this game? This is like a business version of another game that we won't get into. All right, we'll have to save for Bloomberg After Dark. All right, we'll get into that later. What a week, guys. Fun to walk through it with you all, and we'll see what happens over the weekend and next week. It is a wrap for our cross-platform coverage. Watch the Derby, check out the Buffett meeting, and we will see you again, same time, same place on Monday for Beyond the Bell on radio, TV, YouTube, and of course on Bloomberg Originals. Have a good weekend. We've talked a lot about folks traveling again, continuing post-pandemic. So we'll see what Axel Heifer is seeing firsthand. He's CEO at Trivago. He joins us on Zoom from Dusseldorf, Germany. So nice to have you here with us, Axel. First off, how are you?
I'm good. I'm good. Travel is coming back now, even in Asia. So, yeah.
Well,
getting better every day.
Well, tell us a little bit, and we want to drill down a little bit, because we've gotten from a lot of companies. Your company reported earnings. We've heard from Expedia and Booking. Booking Holdings, they both reported double-digit increases in gross bookings in the first quarter. Investors reacted a little bit differently to each of those. You guys came out and reported on Tuesday. Shares did sell off on Wednesday. I just want to go there first off. What are you hearing from the analyst community and investors about your results specifically?
Yeah, so I guess if you're looking at our results, I mean, we've seen solid growth in the first quarter, and we've seen slightly lower margin than we had last year because we started to invest into our brand marketing and into our Hotel Direct initiative to prepare for the summer. The reaction on earnings is always against expectations. So apparently expectations have been higher than what we delivered, but we are happy with our results, and we think we are on good track for a good summer.
So you expect, and then those investments that you're making to work and get through the summer, you'll see that in subsequent quarters. That'll pay off.
Yeah, I mean, I guess you have obviously your direct performance marketing investment that have an immediate payoff, and then we've always been very strong in brand marketing, and there in particular in TV. We produce our spots in-house, we test them in-house, etc. So that's one of our core strengths, and there the payoff is it's not immediate, but you get significant payback within the first year, and then you're obviously building it up. And coming out of the pandemic, we obviously need to build up that brand equity and revamp it in a way. So you will see the positive effect of the campaigns really over the quarters to come.
Something that I thought was interesting, you did have a survey recently that showed that consumers, they were comparing prices more than they had been, especially as we are going into the summer travel season. What is this telling you and telling all of us really about the consumers as far as just trying to find cheaper prices at this point when inflation obviously is still troubling for some of these ticket prices?
I mean, that's exactly the reason. I mean, the inflation is sky high in most of the Western countries, and there are real wage contractions in quite a lot of countries. So consumers need to save money, and they save money in their daily groceries, and they save money when they are traveling. But what is interesting is that people do want to travel. So what they do is they compare more prices, as you said. So in the US, in our survey, more than 60% of Americans said that they are comparing more hotel prices than they've done before. Travelers are cutting their trips short slightly, so the length of the average trip is contracting. And the third, which I think is probably the most interesting, is travelers are becoming more and more flexible in terms of destination. So they are going for a similar experience but a cheaper destination. So if you're looking at the two most interesting pairs from a US perspective, Canada is down, relatively speaking. Mexico is up in terms of nearby, nearshore international travel. UK down and Turkey up, but the theme is the same. So it is a trip abroad, but it is a slightly cheaper experience. And that's how consumers, and that's not only in the US, that's pretty much everywhere in the Western world, are trying to compensate for some of the price increases that you see everywhere.
Does what you're seeing, Axel, say to you recession in terms of what consumers are doing, or just being prudent?
I don't think I wouldn't talk about a recession. I mean, we think that the travel market overall will be up, but it will not be up as much as the prices are up. Yeah, so consumers are obviously trying to soften the impact of the price increases. But still, I mean, it's a good market, but people cannot print money, so they can only spend $1 once.
Mm-hmm. And you were talking about these different regions. I mean, how much of a boost when it comes to the reopening in China in particular do you think that'll have on that particular corner of the market?
I mean, Asia, I mean, this is the year of Asia, that's for sure. I mean, we don't only have China, we also have Japan that reopened more recently. We don't operate in China, so China for us is only a destination, but it's a very, very important destination for many of our Asian markets, Singapore, Hong Kong, Taiwan, South Korea, Japan, etc. Japan is for us both. I mean, it's a country we operate in, so it's an outbound inbound market, and we see very strong growth there, and we see exactly the same thing that we've seen in the West last year and the year before, that there is a huge pent-up demand of people that do want to see their friends, they do want to visit family, they do want to see business partners, and there's a wave of travel coming.
You know, Axel, over the last few years, certainly, you know, during the pandemic, out of the pandemic, we've talked about a lot of bigger, broader macro issues of running a company. And, you know, one of the things is accessing a workforce, and you tap into a global workforce in a big way. Where are you on that? Are you hiring? Do you need to hire? What can you tell us about that on a day where we were focused on U.S. jobs?
Yeah, I mean, we are hiring, of course. I mean, you need to hire. The labor market, in particular for highly skilled labor, is very tight in Europe, and we are in a fortunate position that we do have a global brand and we can attract people from all over the world. So right now we are down to 15% of our new colleagues are from Germany, 85% are from outside of Germany. India is a strong country where we're recruiting from. Russia actually has become a lot stronger in the last 12 months for obvious reasons. Yeah, so I think you absolutely need to recruit internationally if you want to fill specialist positions.
Tell me about India specifically, because I feel like in the last couple of months, the discussion and narrative around India has changed dramatically, and some of it has to do with Apple in terms of it increasingly focusing on that, not only as a place to produce, but also to sell. Is that something, too, that you are pivoting more towards, or is that, just talk to us a little bit about that, if you would.
Yeah, I mean, for us, it's a bit different because we just operate out of one office. So for us, it's more the strength of our brand in the local market. And India is a very big market for us because it's a very big country, and we're not operating in China. So it's the biggest country that we operate in. That's why it has always been strong. Russia, as I said, has become a more important market to recruit, and Africa actually is also growing very quickly as a region where we can recruit top talent from.
We only have about a minute left, but Carol and I have talked to so many different people about how AI has impacted their business. I was curious, how do you use AI when it comes to your platform?
Yeah, it's an interesting question. I mean, our platform has been run on AI or on machine learning for a very long time. I mean, we use machine learning algorithms to ensure that we show the right hotels in the right place and the right prices. If you think more about ChatGPT and the next generation of AI, that's very, very interesting for certain applications. On the travel space, it's more for the inspiration phase from our perspective. So if you don't really know where to go and when to go. And then it is obviously extremely valuable if you want to generate a lot of content in an automated way. So it will make a difference to the industry, and you need to stay open-minded, of course, and that's what we've always been doing.
Well, Axel, we always appreciate the time with you. I know it's a little bit later over there, so thank you so much. Have a great weekend. Axel Heifer, he's Chief Executive Officer of Trivago on Zoom from Dusseldorf, Germany. Hey, a headline crossing, U.S. bank deposits falling to $17.167 trillion from $17.180 trillion in the prior week. So a little bit of a move down there, but just wanted to bring that to you with our focus, of course, remaining on the regional bank sector. You're listening and watching Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Sources tell Bloomberg the Justice Department is investigating whether Binance Holdings was used illegally to let Russians skirt American sanctions and move money through the world's biggest cryptocurrency exchange. An up day for the Dow, the S&P, and NASDAQ. We did finish off session highs, but still a gain of 1.85% today for the S&P, up by 75 points. The Dow up 546, up 1.6%. NASDAQ today up 269 points, up by 2.2%. Now on the week, though, losing week for the S&P this week, down by 0.8%. The Dow this week lower by 1.2%. Bottom line here, it was a chaotic week for financial markets. Today, though, we did see a rally in risk assets. 10-year yield 3.42%, 2-year yield 3.90%. Gold 2017, lower today by 1.6%. Crude oil rallied 4.1% today, 71.38 a barrel. Yes, jobs front and center, but also reaction to Apple's report last night. That stock surged today by 4.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on Bloomberg Radio, on YouTube, and Bloomberg Originals. Carol Master along with Jess Metten. So on the Bloomberg, a story I read in early this morning about New York Attorney General Letitia James proposing a state law to tighten rules over cryptocurrency companies. It's her latest swing at an industry she claims is suffering from, quote, rampant fraud and dysfunction. Now, under her proposal, New York would require independent public audits of crypto exchanges and bar people from owning both brokerages and tokens to prevent conflicts of interest. In a statement today, James calling her proposal, quote, the strongest and most comprehensive set of regulations on cryptocurrency in the nation. And I got to say, Jess, one thing we know for sure, after the carnage of the last year or so, regulators are looking very, very closely at cryptocurrencies and anything related with it.
And even just the dynamic of how, say, Bitcoin in particular was performing, especially in March, right, in the midst of what was happening with the banks. I mean, especially after we just got off of April, this was the longest winning streak for Bitcoin since 2021.
But a lot of volatility and still trying to understand how it all fits together going forward. And on that, in our weekly crypto segment, we have with us Christopher Alexander. He's Chief Communications Officer at Liberty Blockchain. They're a blockchain provider. He joins us via Zoom from Seattle. Christopher, nice to have you here on Bloomberg Radio. How are you?
Good. Thank you. Checked in on what was going on with the news and came across the decision in New York. So an eventful day.
What do you make of that specifically?
Well, I haven't looked closely at it, to be honest. Kind of skimmed it, listening to your description of it. The concern that I have is a lack of understanding by regulators of crypto. And I think the biggest breakdown is understanding the difference between blockchain and crypto. And, crypto is the byproduct of, essentially time sharing your computer to serve as a server, excuse me, on a form of internet. And you can speculate, you can speculate on exchanges with coins. Blockchain is a technology with this amazing potential. And when you conflate the two and treat blockchain mining and certain things the same as if it were crypto, that's where these problems really break down. And I'm a little concerned about what they're trying to do in New York and how they're stunting the technological development in order to deal with a exchange type of issue.
In what ways would this end up impacting the technology behind when we're looking at blockchain in particular, whether it's in New York or when we hear, obviously, officials in Congress debating about different regulations?
Well, I'll give you a great example. There's a mining rig of sorts, and it is essentially a piece of computer hardware. And the signal from the SEC, who won't actually give us rules as an industry, despite our repeatedly asking, and Coinbase now suing to compel them to start making rules instead of just regulating by enforcement. Their argument is that it is a security. Well, by way of analogy, what they're saying is if you buy stocks with the computer because you're day trading online, your computer is a security that could be regulated by the SEC. Now, I'm going to presume they don't mean to do that, but I think it perfectly highlights this problem of not fully understanding, again, the difference between buying Bitcoin on an exchange and being part of a blockchain and looking at developing Web3 applications that could have amazing impacts in the future.
That's interesting, too. As far as the regulation that could potentially be coming, what are you expecting on that front as far as what other things could be rolling out?
Because would you agree that there needs to be some transparency and oversight considering what we've seen in the last year?
Oh, I don't dispute that for a second. And I think it's very interesting that two of the recent SEC actions that have been notable, there was a Wells notice to to Coinbase and the fine to Kraken. Those are two groups that want to work with the SEC and have been begging, essentially, the SEC to provide a clear framework. There is a very clear framework. Japan and Switzerland, for example, have done an amazing job. France as well. Yes, there does need to be, there should be rules, and industry welcomes any effort by the SEC to actually make it.
So tell us, and I would agree with you on a certain level that I agree that blockchain is different from cryptocurrencies, but yet they do certainly go hand in hand. Tell us about Liberty Blockchain specifically, your company, what you are doing, because you're not the only blockchain out there. So tell us a little bit about what you guys are up to.
I will, and just to clarify, so you can have a blockchain with no crypto. Deloitte, I believe, and Amazon Web Services both run pieces on the blockchain. I believe the California DMV is now putting files on the blockchain. So you can separate them, but it's very unusual. And when people think about this, and this is really what they're talking about, it is a blockchain that produces a proof of work or proof of stake, which is a coin. But as for Liberty, we're a veteran-led organization, and what we believe in is a free and open society. And what we're doing is we're building the infrastructure from the ground up, and then we work with a DAO, with the community of people who are going to decide what we're going to do with that blockchain and those capabilities. And one of the things we're working on, we're very excited about, is we want to look to build a free and open society for the future. We also want to learn from the mistakes of the past and trying to do it. So we're kind of a fusion of those. So one of the first things we'll probably roll out, it's in development, is a historical explorer app. So you can go to, say, Fort McHenry in Baltimore, where I live, see what the Star Spangled Banner was, and then you might get a reward, a digital reward for participating in this kind of learn-to-earn activity.
I know you also have talked about when it comes to the off-ramping of crypto. Can you explain a little bit about what that is and maybe how there's some relation there whenever we're talking about the squeeze, obviously, on some of the banks that we've seen in recent months?
Yeah. Off-ramping is where, for me personally, when I listen to discussions about crypto, the fair critiques and the ones that perhaps are not, it really frustrates me. Off-ramping is how you take your Bitcoin or any other form of digital currency and turn it into a fiat currency to pay locally for something. So you're paid, saying, I'm paid with the US dollar coin, so that's a stable coin. And then I convert that to dollars to a number of different ways when I want to buy something or move my money out. Well, I do it through a bank, and if I don't do it through a bank, I do it through Visa or MasterCard, and they've certified everything. So, with some rare exceptions, it's very hard to launder money because there's a transaction, and there's a point where you have to turn that into a local currency. Now, you can launder in countries where you can easily launder money, but this is not something that's in any way inherent or essentially a part of the blockchain. In fact, what you find is, you have a group out in DC that supports US government investigations. The transparency of the blockchain allows them to roll all of these transactions up like they did with Silk Road. So off-ramping is turning your crypto into your fiat currency. And when you say the crypto industry is rampant with all these problems, well, the only place you can really off-ramp is a bank. So I'm not sure how you don't critique banks and pin all of it on crypto. It's an issue that's being resolved, and it goes back to your point about, yes, we do need regulations, and off-ramping is the point where you can very effectively tamp down on terror financing and other issues like that.
If I may, because we only have about a minute or so left, I mean, you're interesting too, and you have a very varied background in terms of some of the different companies you've worked with: Disney, IBM, Coca-Cola, and then, tell us a little bit about the folks that are involved specifically at Liberty. I know veterans is a big part of it. Just what that means in terms of your perspective.
Yeah, we mostly met in the special operations community working in Iraq, Afghanistan. I was an information warfare planner, I guess you could say. Some of us had other jobs. And we were fascinated by the potential of blockchain. We wanted to have something that, again, promoted the principles of a free and open society. We're going to look to do a lot with veterans as well. And so we just knew and trusted each other from, the most trying of circumstances and the most austere environments. And that's kind of how we coalesced and started working on it.
Christopher, just 30 seconds here. Who do you perceive will ultimately be using your blockchain? or are already?
I think it's a mix of people. I think if you're concerned about authoritarianism, if you're concerned about some of the creeping sort of censorship and things that we see in social media platforms and the like, you're great for us. If I had to sum it in a word, we're kind of the libertarian blockchain, I think is how you can put it.
All right. Well, interesting. I'll be curious to see about the future for you guys. So look forward to checking back. Christopher Alexander, he's Chief Communications Officer at Liberty Blockchain, joining us via Zoom from Seattle on this Friday. All right. You are listening and watching Bloomberg Business Week. Carol Massar along with Jess Metten. Let's get another check on world and national news. Off to Nancy Lyons in her 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. The economy last month added 253,000 jobs, beating estimates by more than 60,000. President Biden says it's due to billions of dollars of private sector investment, and he's hitting at Republicans' plans for the debt, which he says will send the economy in the wrong direction.
Let's get it straight. We're trying to hold the debt hostage to us to agree to some draconian cuts, magnificently difficult and damaging cuts.
The president says he'll reiterate to congressional leaders at the White House next week that the country needs to pay its bills. The World Health Organization says COVID-19 no longer represents a global health emergency. But WHO Director General Dr. Tedros Ghebreyesus says we do need to stay vigilant.
The emergency is over, but we have started many initiatives to prepare the world, and we need to continue that commitment.
Ghebreyesus says COVID has resulted in at least 20 million deaths worldwide, or 1 in every 400 people. The head of the Centers for Disease Control and Prevention is stepping down. The White House announced today Dr. Rochelle Walensky is leaving the agency next month. She's been in the position since the start of the Biden administration and played a key role in its response to the COVID-19 pandemic. The Department of Justice reportedly has subpoenaed the Trump Organization for records related to former President Trump's dealing with Live Golf. The New York Times is reporting federal prosecutors want to see records about Trump's business and the Saudi-backed golf tour that plans to hold 3 tournaments this year at Trump properties. The DOJ issued the subpoenas in its investigation into how classified documents wound up at Trump's Mar-a-Lago estate in Florida. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long on Bloomberg. The Dow, the S&P, NASDAQ all advanced today. A rally in equities halted the S&P 500's longest losing streak since February. It was, however, a losing week for the S&P, down 0.8%. Today, the S&P rallied 75 points, up 1.85%. The Dow was up 546 points, up 1.6%. NASDAQ up 269, a gain of 2.2%. 10-year yield, 3.43%. The 2-year, 3.91%. Spot gold at $2016 the ounce, down today by 1.6%. A surge, so for crude oil, up 4%, $71.30 for a barrel of WTI. A chaotic week for financial markets ended with a rally in risk assets, possibly driven by short covering as regional banks rebounded from a brutal rout and solid jobs data tempered fears of a recession. Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group, and he was our guest right here on Bloomberg Business Week.
I think we had some interesting news this week. We had obviously the Fed meeting, and I think we were hoping for two things. We were hoping to hear whether the Fed was done. We didn't really hear about that, although we know they're closer to the end. And unfortunately, the Fed did not say that they were about to cut rates, even though the Fed fund futures market is currently pricing in 3 cuts this year. So that sort of difference between the Fed and what the investors are thinking is yet to be determined.
And today we saw shares of PacWest advance by 81.7%. Western Alliance Bancorp up 49%. Schwab shares up by 4% today. And the S&P, the SPDR S&P Regional Banking ETF, advanced by 6.3%. Again, recapping, S&P up 75, up 1.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with a Bloomberg Business News Flash. Hey, we want to just shift our gears to something that should be on your radar for tomorrow, and that is Buffett, Berkshire Hathaway, hosting its annual meeting. So grab some coffee, get up early, look for some of the headlines. It's the only second annual meeting that will be held in person since 2019 because of the pandemic. We love talking about all things Warren and Berkshire Hathaway. And it's because it's a diverse company, lots of holdings that really are a proxy for the state of the U.S. economy.
It definitely is, especially when you think about the largest types of banks that it holds, whether it's Bank of America. Also, when it comes to credit card issuers, Amex is one of them. Also, another bank, Citigroup. And then when you want to look at some other, like, say, Bank of New York, Mellon, that's another name in there. So, and then obviously we always talk about Coca-Cola, right?
Well,
when it comes to Warren Buffett.
It's the big publicly owned companies, but it's also the smaller companies that it owns that really gives you a cross-section. So let's get to it with Matthew Palazzola. He is on the ground in Omaha. He's Bloomberg Intelligence Property and Casualty Insurance Senior Analyst, because certainly insurance makes up a big part, as we know, aka Geico and others, a part of the Berkshire empire. He is actually at the shareholder shopping event that is underway. Matthew, so good to have you here with Jess and myself. When they do this meeting, it is quite an event and quite an affair. Set the scene in terms of where you are and what you're seeing.
Sure. So tomorrow is the day where Buffett and Munger actually take Q&A. But today in the convention center, they have most of the Berkshire companies kind of out here. They're selling stuff. There's the management. They're talking to people. And it's kind of a madhouse. It's more crowded than last year. There's lines to buy everything. There's a company called Jazzwares that they acquired through Allegheny that's selling these toys that my daughters are aware of called Squishmallows, and there was a line 2 hours long to get them, and they had to shut it down.
Well, I was going to ask you, I mean, how much See's Candies and Brooks Sneakers have you been buying? Because that's certainly part of the company's, not, the publicly held entities, but this is what he's known for, right, in Berkshire, in terms of they own so many different, often family-owned businesses that they have tapped into.
Yeah, and what's great about it is what you can see is that they're unique businesses. They are leaders in their specific industries, and they have pricing power. I mean, the See's Candy line I couldn't even get into. There's definitely more people here than there were last year. They also own Fruit of the Loom, by the way, which they're selling at a discount. You can't even get into there. So, they're just phenomenal companies.
So what are some of the top things that are on investors' minds right now? Because Carol and I earlier were talking about, obviously, the corporate structure, but clearly we also have to think about the economy, right? And what Warren Buffett, as far as the companies he owns, the tell when it says about the economy, whether there's big companies, whether it's big banks, or some of these smaller firms.
Yeah, so what's great about Berkshire is there's going to be puts and takes, right? So with some businesses may show a little weakness in the first quarter results, which will come out tomorrow as well. But then I think other ones will be strong. So there's going to be a bunch of puts and takes. And, I would not say that it's a proxy for the market or the economy. I think it's better than that. So I think you'll see earnings power show through with the first quarter results. And in the meeting, I think succession is going to be a big issue, and I think capital allocation should be a big issue.
But in terms of succession, I feel like that Berkshire and Buffett have taken some big steps to kind of set the stage for that. Yes?
So, funny enough, they accidentally let it leak that Greg Abel, Charlie Munger on stage, I believe at either 2020, 21, I forget which meeting, said Greg will do a good job when he takes over. So they kind of accidentally let it slip that Greg was going to take over, but since then he's been out there.
Or did they accidentally?
Yeah,
no, I'm just kidding.
Maybe
Anyway, go ahead.
Flyer than we think, but he's been out there. He did an interview recently. I'd like to hear more from Greg, to be honest, to hear more about what the investment function is going to look like when Buffett is no longer here. Is he going to make those decisions? Are Todd and Ted, the investment managers, going to make those decisions? I think if you want to get institutional investors excited. Retail investors clearly like the stock. I'm looking at thousands of them right now. But if you want institutions, they need to get comfortable in what's going to happen in the future.
To be fair, though, Todd, Ted, Jay, and Greg, I mean, I remember when they moved into Apple and we were saying this wasn't kind of your typical Buffett investment. So they have been making their mark or putting their mark on the company for a while now.
I think so. And the thing is, Buffett will be a little cagey. He doesn't want to put them on the spot. He doesn't necessarily let them take credit or
he still likes to be in charge.
Yeah, I mean, yeah, he does. So I think we just need a little more confidence in all of them.
One thing I was curious about, obviously you brought up Greg Abel and the question about investors, whether he could have the same command and trust, obviously that Warren Buffett and other leaders had there. But what about the culture as far as maintaining that kind of success there, as far as the question your sources might have about that?
Yeah, so one of the interesting things is when I've been talking to these companies is, Berkshire's very hands-off with the companies they own. So they buy good businesses and they let the good businesses be good businesses. In a recent interview, Buffett had actually said he thought Greg was better at extracting capital and managing capital at these businesses. So I mean, I think they're still proud to be part of Berkshire even when Buffett's not there. And I think maybe there's even room for alternative uses of capital.
Matthew, when it comes to capital, talk about that fortress balance sheet. How much cash does Berkshire have on hand right now?
So it was, I believe, 130, 108, I forget, but over 100 billion. They like to keep 20 to 40 billion just in cash. So they have a ton to make acquisitions.
So might we hear something on that front in this environment? He does like banks. He has liked banks in the past. It'll be curious, could he see some interest in a regional? They've been on sale in a big way.
I think that'll be a big topic tomorrow. I don't know. They can't own more than 10%. They won't want to. Would they maybe move into them potentially? So tomorrow we'll see, how much equities they do buy, and hopefully they get questions on that. Sometimes they don't if they take shareholder questions. People are worried, or not worried, but thinking about Occidental Petroleum. Is he going to actually pull the trigger on that or not? So I think, and I don't think he's going to tip his hand, but I think any comments on the energy space and the banking space will be very interesting.
We only have about 20 seconds left. What about railroads?
So railroads, we know railroad volumes were down, but we know that Burlington Northern is, has a monopolistic empire in the western United States, and just seems to do well even if the economy's not. So I think it'll be fine.
You mentioned Occidental Petroleum. Berkshire is the #1 shareholder in that company, and their latest change was adding. That was the end of March. All right, Matthew, when you come home, bring some nuts and shoes from See's Candies, because that is a really good mix. Matthew Palazzola over at Bloomberg Intelligence on the ground in Omaha. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Big day for shares of DraftKings after earnings up today by 15.3%. The online sportsbook posted first quarter sales that beat analysts' expectations. It also raised its guidance for the year. Again, DraftKings today up by 15.3%. Peloton Interactive says it has identified a flaw relating to the seat on its entry-level bike, a problem that affected a small fraction of customers. And with more on the story, here's Bloomberg's Tom Busby.
Charlie, the company disclosed the issue in a filing that followed its quarterly earnings report and alerted employees through a memo from Peloton's internal product safety committee. The defect involves the seat post. That's the part that attaches the saddle to the frame on its original bike model. Retail cost $995. In certain circumstances, the post can break at the weld joint. Now, in the filing, Peloton says it's working with the U.S. Consumer Product Safety Commission on a remedy. As of the end of April, the company identified 35 reports about the problem out of 2.4 million units sold since the bike's launch in the U.S. and Canada. Charlie?
And that's Tom Busby reporting Peloton shares did advance today by 2.2%. Apple reported a rebound in iPhone sales last quarter, helping the world's most valuable company top earnings estimates and weather an industry-wide downturn that has battered much of its product lineup. Today, we had Apple shares advance by 4.7%. And those are some of our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Jess Met and Tim, on leave. Right now, though, we do want to get another update on world and national news. Off to D.C. and Nancy Lyons. Hi, Nancy.
Thanks, Carol. Unemployment in April dropped to 3.4%, matching January's numbers and tying for the lowest unemployment rate since 1969. The Labor Department reports the economy added 253,000 non-farm jobs, beating analyst estimates by more than 60,000. Heather Boucher is a member of the White House Council of Economic Advisors and tells Bloomberg she's encouraged with the latest numbers.
We actually saw this month that the share of women in their prime working ages, between 25 and 54, the share of them in the labor force hit an all-time series high going back to 1948. So that, I think, is indicative of the strength of this recovery.
Boucher also says they're seeing a slowing of inflation, although prices still remain too high. Well, one area where the economy is definitely not slowing down and rising prices are not a deterrent is travel. Bloomberg's Irv Chapman has more from Washington.
Travel boomed in the United States, where recovery came fastest, then Europe, now finally Asia. Glenn Fogel, chief executive of Booking.com, said in a Bloomberg interview.
This terrible pandemic kept a lot of people from traveling, and people saved a lot of money during the pandemic. Well, they want to spend those savings now, and they're spending on what they want to do, which is travel.
Fogel said artificial intelligence will be making it possible for his customers to chat online with an artificial travel agent. In Washington, Irv Chapman, Bloomberg Radio.
Crowds of royal fans are camped out along the procession route in London, where King Charles and Queen Camilla will make their way in a carriage from Buckingham Palace to Westminster Abbey for Saturday's coronation. Among them, Miranda Miller, who traveled all the way from North Carolina.
This is what he was born to do, and I really do believe he and Camilla are soulmates, and I'm happy for them. I'm happy for them together, and now he gets to have his reign, and we'll just wait for William and Kate's.
The coronation service begins at 6 a.m. Eastern Time tomorrow. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Jess.
All right, Nancy. So appreciate Carol Master along with Jess Minton. Bloomberg Business Week, our weekend broadcast coming up, features our time this past week at the Milken Institute Global Conference in Beverly Hills. We talked to a bunch of financial leaders, everything from the banking crisis, Fed policy, real estate, office space, so much the rise of the private markets. We also caught up with the chairman panelist. He caught up with us in an interview. He spoke about financial literacy and a program to put those often locked out of the financial system into homes. Here's what he had to say.
Fulton Bank is this great institution in Pennsylvania doing great work, but they're not a household name. This relatively small market cap bank based on the banks we hear on TV or in Bloomberg all the time did $1 billion in mortgage creation for African American, not just minority, not women, not some super group of underserved, just African Americans, $1 billion through Operation Hope in our Hope Insides, proving that you can do well and do good, proving that you can move the needle on 41% of African Americans who own a home, and when 75% of whites own a home. That delta of 30% is the loss of wealth creation, the loss of tax base, the loss of opportunity. So the fact that one bank that is not yet a household name, maybe they will be after this interview, did $1 billion of credible, well underwritten, structured home ownership, tying it to our coaching work at Hope Inside, where we got credit scores up, debt down, savings up, so people could qualify. So did it in a safe and sound basis. We just did the hard work together. $1 billion, that's a real number.
All right, that's John Hope Bryan of Operation Hope. Catch more of our interviews from Milken, including Mark Adanazio at Crescent Capital, David Hunt at PGIM, the founder of Zero Avia, on hydrogen in planes, and Sheila Patel at B Capital talking the venture capital markets. That's 8 a.m. Wall Street time on Bloomberg Radio, also on our podcast feed. A lot of interesting discussions. I mean, there was so much just to talk about this week.
Doing such a great job there with all of the interviews, Carol. It was very impressive.
Well, it was a great perspective. We were lucky to be on the ground there. All right, everybody. Carol Massar, Jess Metton, more to come right here